You caught me, Keith.
Oh, it's Friday, August the 5th, and it is another week. I'm pretending.
Another week, Keith. You caught me with my mouth full of food. Just after lunch on August the 5th, Friday. That was another week of That Was the Week.
It definitely was.
And appropriate enough for Keith's newsletter. It's a meta edition today. He is writing, or you've been thinking, Keith, about the future of the newsletter itself. So, does it have a future?
Well, it's struggling. The trigger for this was two articles. One by Peter Kafka at Vox, who his article that features is called "The End of the Newsletter: What Comes Next."
The
Uh,
end of history, right?
exactly. But then Hamish Mackenzie, one of the co-founders of Substack, wrote "Substack is for communities," and his leading quote was, "The last era of the internet has been dominated by platforms owning people, but the next era will be about people owning platforms." And
You've
so
heard
he's
that one
saying,
before, right?
yeah,
What exactly does that mean? I mean, I don't see how. I mean, his platform, Substack's an interesting product, but why do the people own it any more than any other platform?
well, there's a philosophy behind Substack, which is some would call it a dogma. Some would say it's a philosophy. It's pretty anti-advertising. It is pro-subscription, and it builds in complementary subscriptions between peers. So you could get a subscription to That Was the Week because I comp you, and you could reciprocate. And so his view is that it's a pure writing environment, not driven by advertising, therefore not driven particularly by page views, but more by whether your audience value you enough to pay for your newsletter, which is, a point of view that is quite different than, let's say, Twitter or Facebook or even Medium, which is,
Although I saw this was a new feature on Twitter. I don't know if it's this week they've added it, but now you can become a super follower, and for $2.50 a month, you get more tweets. It's basically the same model as Substack.
no, it's a bit different. It isn't new, but they've changed the price. It's called Twitter Blue, and super followers is part of what you get. And they just increased the price, by the way, to $4.99 a month. Um, and it doesn't stop you getting ads. You still get ads. So they still are mainly an advertising model, but they've supplemented it with a kind of an upgraded feature list if you pay, um, which kind of makes some sense. It's a hybrid. I think you and me are kind of outside of this because we don't really look to make money from newsletters or from Twitter or from Facebook, so we're a bit outside of it. But I think if you're inside it, there's a huge debate going on about advertising supported free, therefore targeted and anti-privacy and all that, versus what is closer to the Apple Substack universe. Also, that site that lets you donate to people. I forget what it's called now. Um, uh, who are creators, which is much more of a content first. Um, you're using the platforms to promote yourself, um, because they add value to you in some other way than getting paid or being advertised on. And Hamish is a zealot for that. I mean, I don't think Substack will ever have advertising. So, so there is something there. Uh, why this question mark is because with the downturn in the stock market, which seems to have reversed, by the way, we could talk about that. With this downturn in the stock market and the decline in values that private companies can raise money at, Substack just decided not to raise its next round of financing, and it did some layoffs. So,
Yeah,
so
I mean, decided. I mean, you use that word carefully. I mean, it's probably because they couldn't raise the money. No one decides not to unless they can't.
well, it depends how much money you've got in the bank. Like I'm sitting on 3 years worth of money in the bank at Signal Rank, and I can choose not to do a round of financing if the price is wrong. So I'm in a lucky position. Obviously, you can't do that if you're near the end of your money. But I don't think Substack's near the end of its money. It raised a lot
But
of
the
money.
thing with Substack is it is a nice product from a user point of view. I would agree. I don't use it to generate revenue, but as a free newsletter, it's good.
Yeah.
Um, I just,
Do you use it, by the way? Do you publish your stuff using it?
yeah, I use it, and I have a list of maybe 2 or 3 thousand people I send my stuff out to. Um,
Same as
but the
me.
thing with Substack, I don't really understand. Which, as you know, I tend to be rather cynical or skeptical on a lot of this stuff. Is they raised a lot of money, and that money has mostly gone to paying quite well-known writers to put their stuff on the platform. I'm just it wouldn't surprise me in the slightest that their next year's or next month's medium, and they'll just go away because there's no real viable model here.
Well, that's partly what Hamish is talking about. There is a quite thorough critique of Substack that we talked about a couple of months ago, which says it doesn't have a network effect because it is really just an email list, and you write and you send it to your list. So all of those network effects, when you have followers and you can mention people and they know you mentioned them and all that
And
stuff,
then it grows because of that,
it goes because of
and
that.
because of tweets and retweets and retweets.
All of that stuff isn't in there. So Hamish's article, which is called "Substack is for Communities," it's here, claims that that is not, intentional, and um, that what will happen is that Substack will evolve into becoming the center of a community. So I'm like you. I was skeptical, so I wrote the editorial and I said, "Well, look, here's 6 things Substack should do if it really wants to not become Medium. One is enable at mentions of other newsletters and authors. So if I could say Hamish and he would see it, that would be better than him not seeing it. Enable followers of authors all the way through to their comments. So I could follow
Yeah, that's
you.
good. Yeah, I like that.
Enable Clubhouse style video and audio live Substacks where we can discuss, like if we could invite some of our readers to join us here, that kind of be interesting. Allow me to pull articles from the Substack app. They've got an app on iOS and Android. Oh, just iOS, I think, right now. If I could take articles from that and put them into my newsletter, that's a feature Review has, but Substack doesn't. So um, it's disconnected from what I read. It should be more connected. And then figure out how to merge comments with social connections to enable a network to form around a newsletter. So today, if somebody comments on my newsletter, it's just there. What if there was a comments thread in the app that goes across all the newsletters I follow so that I could learn about people and engage with them? A bit like the information just launched. The information just launched some of these things actually. It did a very good job. But the information costs $300 or $400 a year. And then finally add tags so that you could follow subjects.
Yeah. I
Um,
think the information is, if I had to bet, I mean, they don't really compete, but the information didn't rely on. I just think a lot of the problems with these media startups, like Substack and like Medium, is that they should have become businesses. They shouldn't be raising money. They should figure out how to become businesses and then maybe raise some money. I mean, the information has done that. I mean, the woman there has Facebook money from her husband, so I assume she didn't need to raise money. But none of them have business models. It's a
yeah.
classic old disaster. And then so when the money goes away, they go away. I mean, that's really what Medium
Well,
was. It was bankrolled by Ev Williams.
yeah, I think that's true of Medium. I think with Substack,
Do they
I'll,
make? I mean, their business model is what, sharing the revenue of the subscriptions. That's their only model.
that's their only model so far, which can be a lot of money, by the way. I mean,
Yeah, I mean, if they get, but I mean, what are their numbers? Does anyone even know?
9 million in revenue last time they announced it.
Which is pathetic, isn't it?
Actually, I've only
Given
ever
how
got.
many millions they've had to recruit high-profile writers.
Well, I'll correct one thing you said. You're partly right and partly wrong. They did pay some writers to go join the platform. I don't think it was anywhere close to most of the money they raised that they used to do that with. I think it was just a
Yeah, I
push.
mean, their most popular writer is the Letter from America woman, who actually I know through some family connections.
They have some
It,
good writers.
they have some very good writers. It would make
I
more sense if maybe they were acquired by TED or the information or people who actually know how to run a business. I mean, what's Mackenzie's background? He used to work as a editor at TechCrunch. Does he know anything
no,
about
no,
business?
he worked with Sarah Lacey.
Exactly. I mean, that sums up everything.
Yeah, but he's a good
What does he
journalist.
know? I mean, what's his back? Is he an ed? Is he a
No,
author, a
I,
journalist?
well, I don't think the question "What does he know?" is a valid question for anyone doing a startup, because the part of the benefit of not knowing is that you don't make you don't hold yourself back from doing things because you've been taught not to do them by your expertise. I think
That
expertise actually is a liability in most startups. What you want is fresh, aggressive, um, vision meets execution, and
yeah,
and so I think he's good. He's got good energy. He's thoughtful. They have executed. Substack's a fairly decent application, and they're adding features pretty much
yeah.
monthly.
I agree. I think that it's a very. I mean, it's a much better product than Medium. Medium to me was a farce. I never understood its purpose, and it sort of reflected a certain body of conceits from Ev Williams that made no sense. It was completely out of date. So maybe you're right on Substack. And what's the Kafka critique?
It feels like link bait because when you go and read the article, it's not as substantive as the headline suggests it might be. All it's really saying is there seems to be less energy around the newsletter uh, thing. Here's the article. It's called "The Newsletter Boom Is Over. What's Next?" And now it's he says things like this: newsletters are now less heated. Some writers have gone out on their own, have decided they'd like a full time job instead. Well, those are kind of normal things that happen all the time. It doesn't mean newsletters have gone away. Just some of the hype surrounding them has. So actually, he's not really making much of a point. So it's more of a headline, but
I think it's the kind of thing that journalists talk a lot about. No one else really cares one way or the other.
I think, yeah, I
How
think
much
that's.
have they raised, Substack?
I want to say they raised 100 million, but we can look. We
Yeah.
can look. One of the nice things about being at Signal Rank is that I have a database of everything, um, and I can share it with you. Let me just log in and without showing you, so we don't get thousands of people seeing my login and password. But here is the Signal Rank.
Tens of thousands, Keith, I hope.
Here's the Signal Rank back end. And if I go to my company profile application
Ooh, that's good.
and I type in
This is just your excuse to show off
Substack.
signal rank.
Well, actually, I didn't know that you. Yeah, Substack has done a pre-seed, a seed, a Series A, and a Series B. It raised 120,000, 2 million, 15 million, and 65 million. So that
Wow.
is a total of $82 million.
And Andreessen Horowitz, I mean, they're not stupid people.
Yeah, yeah. I mean, they did very well. So and the last time they got funding was May 2021. So if you raise 65 million in May 2021, which is 14 months ago, 15 months ago, and you probably still had money in the bank. So let's say you have about 80 million. You're not going to be spending
The
80
real
million.
question is they're putting some of this money into paying writers. What's the arrangement? I mean, in that sense, they're not very different from a magazine. They they put their money into getting headline writers as a way of getting readers. I don't know how it works.
Well, it works if it scales, and I think you can see
That's
the
like
trend.
anything.
You can see the trend. Kara Swisher just announced she's going out on her own.
She's always been on her own, Kara Swisher.
Well, no, she's been on salary.
I'm joking. I mean,
Yeah, but you're right.
Kara Swisher is the most brilliant self-promoter in, since Donald Trump.
And then there's all these people like Casey Newton. There's
Yeah, but that's a different class. So what's Kara going to do? She's not going to go on Substack. She doesn't need to.
I bet you part of what she does, just like she does podcasts, I bet she does newsletters.
So she's giving up the New York Times.
Yeah.
She seems burnt out to me. She was doing too much.
Well, burnt out means she feels like she's doing too much. Right? I don't think she does. She has a ton of energy, but she is doing a lot. You're right. I wouldn't be able to do as much as she does, but she's.
I mean, the real question is, in terms of Substack, I mean, I take Kafka's critique. I think he's right that the buzz has gone out of it, and that if there is a recession, people aren't going to just throw $5 a month just to get some newsletter, which they can mostly get for free anyway. I mean, I don't pay for anyone's newsletter. Do you?
I do actually. I pay for about 3.
You probably pay for Thomas Tonga's, but
No, he's free. I get his for free.
So who do you pay for?
I pay for Matt Taibbi.
Why?
I like his writing. I think it's thoughtful. Uh, Managed subscription. Who
You've
else?
always been a bit of a pro-Russian.
I,
Who else?
I've always been anti-Stalinist. I'll tell you that. So,
Oh, and by the way, this should probably not be done publicly, but I was listening to a very interesting interview in which your whole Marxist crowd was mentioned.
it's probably George Monbiot, right?
No, it wasn't George Monbiot. It was on the Andrew Sullivan show.
Here's my. Oh,
It wasn't
that's,
Andrew Sullivan. It was the guy who I know him. He wrote Everywheres and Nowheres.
and
And
what
he
were they
spent a
called?
year at Kent, and he was talking about your crowd. So I assume you know him.
My
And he,
crap.
he said he was schooled logically in these Marxist disputes with guys like you. He said it was worthless in the sense he didn't really learn anything, but you learn how to make an argument.
Oh, yeah, no, that was a guy who kind of flirted with being part of it for a while. Yeah, I've forgotten his name. Yeah, well, the great thing about that group of people, and Kent was only one of the places where Frank Furedi was teaching, is that was it was kind of like the critical thinking Frankfurt School meets the Enlightenment.
They wish, yeah. I mean, it's not exactly Frankfurt School, but anyway, I'm going to look him up. But yeah,
Um,
so I think we
by
need
the
to
way,
move
here's
on
my
from this, Keith.
subscription.
But my final
Here's
comment
my
on this is that the really interesting question is there a sort of, is there a structural shift? Are we moving from an age of newspapers, which were the brand, where the Times would hire a Friedman or a Kara or someone else, but the brand was still dominated by the Times, to an age in which Kara or Thomas Friedman or whoever become the brand? And we've been talking about this for years. It doesn't really seem to have happened.
Well, here's what I think. I think everybody wants it to happen. I think it's
I don't think the public cares one way or the other. All they want to do is read a piece from
when I
Kara
say everyone,
Swisher.
I mean creators.
Yeah.
And just like you don't want to pay for cable TV, $200 a month when you only
Yeah.
watch 3 channels, you really just want to read the people you want to read. So if the technology and the people can come together to do that, I think it would be very welcome. Now, you have to be quite brave to do it. I mean, Kara cutting herself off from a salary from the New York Times.
Yeah, well, that's not brave. Kara is a wealthy woman. I mean, she's been incredibly successful. I mean,
Yeah, but there's probably in the world there's probably at least 2 or 3,000 people in their environment who could
not in Kara's. I mean, Kara's top 10 or 15, I would say, in journalism.
Well, Andrew Sullivan was the first.
Well, Andrew Sullivan is an example, and Kara is an example, but not many others.
Right, but think of it as a trend instead of an endpoint.
And Kara's
Look at
also her
you. By
friend
the way,
at
you're
NYU, the guy you
and
don't like. What's his name?
NYU.
The business professor, Galloway.
Oh, Scott Galloway. Yeah, he's made a real name. I think you have, Andrew. Look at your LitHub keen on interviews with.
Yeah, I mean, I would say I'm probably bigger than 5 Karas put together. No, I'm joking. I'm not in Karas. I'm not in that
Yeah, but
category.
you
But
make
yeah, I mean, we're all trying to do the same thing. I
you
have
make a
other
living,
sources
right?
of revenue. That's the thing. And I figured out a way of making money on LitHub without having to be selling subscriptions. I wouldn't want to be in that business.
Well, I think neither you or me could make a living just doing subscriptions, but there are lots of people who could, and I do
Well,
think that
we could if we had to. If that was the only way we were going to feed our kids and pay our rent, we would figure out ways of
we'll
doing it.
figure
We're
it out.
fortunate we haven't been forced to do that.
Now the tools to make that even better. Every week there's new fantastic things. Like look at this restream that we're using now.
Yeah, but then what's interesting? You're right, but on the other hand, what you listed, and I think it's a good newsletter this week. I mean, you understand this stuff as well as everyone, but you don't. I mean, that stuff's relatively obvious, and they haven't done it probably because they don't have the bandwidth or the resources. Someone has to put all this
Yeah,
stuff together
yeah, they do.
so
Yeah.
that you don't have to go to all these different places for different things.
Well, that there's um, that's really all to do with um, the article in this week's newsletter that speaks to that is Thomas Tungas has an article called Web3 Needs Messaging.
Okay,
And
well,
he
let's
does
move
it,
on because I think we've done enough newsletter.
yeah.
Let's. Tonga's is usually pretty good. What is he saying, and how's this connected?
Well, so his article is that Web3 needs messaging, which is messaging needed for Web3 success. And what he means by messaging isn't only you can message me and I can message you. He means applications can receive messages from other applications. So basically,
A
what
common
you
language.
yeah. So what you just described as everything. Let's take an at mention. Let's say at AJ Keen on in a blockchain world with messaging. No matter where somebody did it, you'd be
Yeah,
notified that it happened.
yeah.
That would be decentralized, but also re-centralized to you because
But you can't
eventually,
expect even a startup like Substack to crack that. So the really interesting question is, will what you're asking for only be enabled by Web3, a new architecture of the web, rather than applications or startups like Substack, which are still operating in a Web2 environment?
yeah, one of my suggestions was that they create an internal economy for attention and a crypto token to reward everyone in that economy for their attention or for
Yeah.
getting attention. And now that would be a step towards a decentralized Substack. There's no actual real reason Substack has to be centralized. It's just
I
that
agree. And I think in retrospect, my guess is when the smoke clears in 10, 20, 30 years, Substack will be remembered. It'll probably be remembered as a footnote somewhere as a late Web 2.0 company.
well,
Um,
there's still time to
that
evolve.
will fail. It won't. You can't reinvent a Web 2.0 company as a Web 3 company. A Web
I,
3 version of Substack will come along and blow it away.
it's definitely hard because of the people. It isn't a technical challenge. It's actually a personal
Isn't
challenge.
it a technical question? I mean,
No,
the whole nature of Substack is premised on Web 2.
well,
It's
it
a
depends.
classic Web 2 company. You have a centralized place where you go to distribute your content. It's one to many, and the many pay. That's Web 2.
Yeah, but it depends on your vision whether Web 2 is step one on the road to Web 3 or whether it's an end game. At Signal Rank, I'm definitely got a Web 2 view of my first couple of years here. Um, I already can see a Web 3 version in my head. Now, A lot will determine how fast and whether I go towards that or not. But I know I can if I
Yeah.
want.
So let's go back to Thomas Tungus. So he's saying it's not marketing messaging. It's more sort of architectural messaging.
It is. It's like the building blocks are not yet in place and they need to be, is what he's saying. So he's actually very consistent. He talks about Web3 being at the infrastructure stage always, and he's very numerate. So he puts
But
numbers
he's a
around.
VC. He should be the guy putting the money into the infrastructure.
Yeah,
Why
you
is he
see,
complaining?
he isn't complaining. He's actually suggesting because he's not an entrepreneur, so he's not going to do it himself. Messaging the
Yeah.
bot. That's his title. Messaging. Look, he's asking me to subscribe.
And what about Andreessen Horowitz? They're back in the news with their NFT and Creative Commons initiative. What are they doing here?
They published this article by whoever Flashrect is. There's this whole new trend for anonymous founders to get funding. In Web3,
That could have come out of a satirical novel. Who's going to fund an anonymous founder?
lots do. It's amazing. They fund a DAO where the founder is not, you know, aligned with a real world identity. And I'm sure Flashrect is one of those.
It's another iceberg waiting to be crashed into.
So what this is answering the question: how could NFTs become viral and mass? And the answer is to give them a Creative Commons zero license. Creative Commons is the organization that allows open source
Yeah.
creations to be shared and reused. So now there's NFTs with Creative Commons zero licenses, which means you can do what you want with them, and you don't have to buy them. They can be freely distributed chain. So you can now imagine having viral NFTs. These are NFTs. Between you and me, I do not get why
What do you mean
NFT.
between you and me, Keith? There's millions of people watching. This isn't secret.
Okay, it's a British expression meaning I'm going to tell
Meaning to
you.
be honest. In other words, you're not usually honest, but between you and me, I'm finally going to be honest.
But look, to me, these are bullshit. Why are these
Yeah, and if
interesting?
Keith Tier is saying something's bullshit, it really is bullshit. That's all I can say. Well,
Um,
one piece of news that was interesting on Web3, and I want to get to the Crunchbase Web3 tracker because I think that's interesting, is Pearson getting into the game and
yeah,
liking blockchain for digital book resales. I can see an application there where historically Pearson textbooks get sold and then resold, but in this context, their digital sales, they'll always get a piece of the action. It's rather like football clubs when they sell a player, and part of the deal is if you resell, then I still need a piece of the pie.
right. Well, actually, that's one of the features of NFT economics as well. Royalties. They build in
Yeah,
royalties. So, bit of self interest here. My fund in London is an investor in Perligo, which is a digital ebook platform mainly for students that Pearson is a partner with. So I kind of know this world a little bit. And Pearson is struggling for revenue. It's physical print mainly. And
yeah,
um, Perligo is prospering. And I think this whole narrative is around how does the old world of publishing get into the new world of digital. uh,
yeah. So I mean, my reading of the Pearson news is one of two things: either this is real, or this stuff now has become so mainstream that tech people at places like Pearson are able to convince senior executives to throw money at something they really don't understand.
Yeah. Um, I, I think it's pressure of revenue growth as well. They just had their earnings call before this, and this was the CEO responding to questions from an analyst about their fairly average results. So
Yeah.
there's a lot of different things. I mean,
In other
obviously,
words, terrible results. What about the Crunchbase Web3 tracker? What's that doing, Keith?
so Crunchbase tends to be ahead of the curve on things you do.
Well,
It's
you have to
usually,
say that because your wife runs it.
she doesn't run it, but she works there. She runs some of it.
She should
Um,
run the whole thing.
no, I
She
don't.
runs your house, doesn't she?
Oh, absolutely. Without a doubt. So this is it, the Web3 tracker. VC funding to crypto, blockchain, and the next internet. 15,000 companies, $87 billion, 79 current unicorns, and this is on day one. So now this is going to become, the tracker of everything. This is month by month, quarter by quarter, actually, funding. You can look at how many investors have got how many investments. Coinbase Ventures, not surprisingly, has the most. Or Web3 unicorn counts by quarter. It's very well done, and there's an editorial that goes along with it. So I
So
think
how does
it's
it break down? So how much of it is all crypto considered Web3? Because we've had conversations where you suggest that some crypto companies are Web2 and others aren't. Like we're going to talk about Coinbase later. They're a Web2 company, not a Web3 company.
yeah. Well, here Crunchbase uses Web3 in the headline, and then says crypto, blockchain, and the next internet. So they're kind of hedging their bets. It's a
The
catch-all.
next internet, what the hell's that?
Web3 probably, um, as
Yeah,
opposed to Web2.
I'm beginning to think that it's a damp squid Web3. I'm
But
not.
anyway, they're not being
I'm
very.
not convinced that it's a real thing.
Yeah, they're not being very precise. If I click on these 15,000 companies, I think it'll show us here they are, 15,000 companies. I mean, Crunchbase is awesome. You can drill down into every single company. You can look at what
Yeah,
it's.
but the more you drill, it doesn't just gives you a headache if you drill down. So here's my question for you, Keith. In 5 years, are people still going to be using this term Web3?
In 5 years.
Or
Well,
is it
Jack
just going to be one of
Dorsey,
these terms that will just go away? People conveniently forget about it.
Jack Dorsey already coined the term. Was it Web 5? It wasn't 3
Yeah,
anyway.
but that's the more you come up with, the more confusing it becomes. I mean, is there something profoundly new here? And we've talked about this before. The DAOs, for example, are new, but is there really a DAO economy? Are people really going to invest in anonymous founders? Are there really going to be companies that are distributed autonomous organizations? I personally don't believe it. I think it's just
Well, if I
fancy.
say to you, are there really going to be only electric cars?
No, but you're not. You're now. You're sounding. That's sophistic. It's neither here nor there.
Well, my point is that everything that hasn't yet fully evolved looks as if it may or may not, and depending if you're an optimist
Yeah,
or a
but
pessimist.
everybody knows that electric cars are for real. We have two in our family. You've got two in yours. You can't go out in San Francisco without nearly getting run over by a Tesla. I mean, none of this stuff is particularly real, especially the DAOs
Well,
or even the
no,
NFT
no,
stuff. It's still incredibly speculative and
yeah, but
often just dodgy.
if the definition of real is, I don't know how high your bar is for real. My bar for real starts with
About this high.
well, so mine's lowest. How many developers are writing code for it, and how fast is that growing? And there's a great report this week that shows how many that is. It's a lot. So developers kind of, if you said how many architects are building modern style homes, and it was most of them, you'd know that there's going to be a boom in modern style homes. Well, that's true of if you look at what software engineers are doing. So it is real in my sense of real. It's real. Now, has it yet produced game changing products that we all are going to use? No, and I think that's where your definition of real is. So it's
How many programmers does it take to build a Web3 world, Keith? That's my question. I know the answer.
one good one.
No, my answer is you can't count them because they're all anonymous. Let's talk a little bit more concretely. A couple of other interesting headlines. The week, nothing dramatic's changed. Seems that the market's relatively stable. Not even clear if there's going to be a recession. Um, Robinhood lays off 25%. Not good for retail investment. Your boys aren't putting all your money into the stock market, Keith.
The boys still use Robinhood, but these days it's like a bank that they spend money from. They've got
It's
less.
not the Bank of Keith.
It is the Bank of Keith, and they're less interested in investing and more interested in spending. So that is a sign of what's happened recently. And of course, teenagers are very short term. So
They're typical teenagers of Palo Alto. Is Robinhood for real, do you think, or are they another footnote to a footnote?
they're a derivative economy because they don't really do anything for the ecosystem. They're like a meme company, as in, you could buy and sell stocks for free already before Robinhood. Um, their innovation was fractional ownership of stocks. If you only have $10 but you want to own Amazon, you can on Robinhood, even though one stock is a lot more than $10. So that was innovative. And then they added in crypto. But now a lot of the world looks like Robinhood, so that it's less innovative.
Everyone's caught up. Would you bet on Robinhood or Substack?
Well, Robinhood is always going to be a bigger company than Substack because money flows through it in large amounts.
There you have it, Hamish. Keith is not believing in you. Startup of the week, Keith. A famous Web 2.0 company.
Indeed, it is. Startup of the week this week is Startup of the Week. See if you could guess. This company announced that Facebook or Meta is going to be using it for NFTs. And it also announced in the same week that BlackRock is going to give its clients access to Bitcoin through them.
The blind leading the blind. Who are these people?
Coinbase. And
Ooh.
Coinbase's stock was in the dumps and went up significantly on these two announcements. So
Yeah, it's interesting with I mean, there's been so much bad press on Coinbase, given how the SEC is going after them now for theoretically fraudulent trades on their platform of fraudulent.
not fraudulent securities to non-registered
Yeah,
investors.
I wouldn't bet either on Coinbase,
So
but it is interesting they went up 15%.
they went up. Let me just check because I actually can't remember how much they went up. Coinbase. Let's have a look. Coinbase is up 4.67% today. If you go out a month, yeah, look at this. This is kind of quite dramatic. So they were down to $50 and they're now at 93. So they're up 80% in just over a month.
Yeah, but if you do 6 months, they're down. Do the 6 months.
6 months.
Ever the salesman, Keith. You were up six. Yeah, look how much they're down now. It's a
Yeah.
completely different chart.
Well, if you bought here,
This is my chart. Your chart is the 1 month chart.
if you go out a year, however, or even 5 years, I don't think you can. Um, it's a
They
low
haven't been
point.
around for 5 years. Then he went public about 2 years
Yeah,
ago.
they did. Yeah.
So Coinbase versus Robinhood um, versus Substack.
I would probably say Coinbase is your long-term hold, Substack second, and Robinhood third.
That's like comparing Manchester United, Burnley, and Crystal Palace. Finally,
I'm
Keith,
sorry, Burnley, Crystal Palace. Interesting.
tweet of the week.
Tweet of the week this week is all about remote working. Just give me a second to get it on my screen so I can.
And the Meta people have been up to that. You can work for Meta and you don't even have to see Mark Zuckerberg anymore.
Is that true? I haven't read about that today.
Yeah, I mean they're letting everyone work around the world.
Amazing. Well, this is the same. This is Coinbase going remote first, having gone hybrid previously. You can't really see it here, but there's red dots on this map, and the red dots are where their employees are, and it's pretty much everywhere in the US. There's another map in the tweet, which is a global version of this, where most of the dots are in India. So, it's kind of interesting that Twitter also announced this week that it's going remote. It's closing down its office south of Market in San Francisco.
I wonder though if Keith, it's any coincidence that the companies that are in real trouble, Twitter, Coinbase, Meta, are all going remote. And the companies that aren't, Apple, Google, Amazon, they're not.
Do you think there's a correlation there?
Well, I wonder whether it's, firstly, it's a distraction. I'm not sure how important really it is. And secondly, I wonder whether it's a way of trying to keep staff. I mean, I'm sure that the vast majority of people who work at, certainly at Coinbase, are looking around, and Meta doesn't exactly have a great reputation. So it's
I, you
one
know,
way of holding on to staff. Because
if you're,
clearly nobody wants to go back. I mean, the one thing that's clear is nobody actually wants to go back to the office, apart from maybe
yeah,
one or two CEOs who, but everybody else would much rather work from home.
I think that's true, and for let's call it the white collar base.
Well, I mean, if you're making Tesla cars, you don't have much choice. You can't make those at home.
Yeah, so you're possibly gonna see a bit of a bifurcation in the workforce between what you could think of as entitled and privileged remote workers
Like you and I.
and tethered workers like people who work at McDonald's or Tesla for that matter. Tethered probably is going to have to pay more than it did previously, and I think that's globalizing. I think you're getting an equalization of pay levels due to the fact that people can be remote, um, and it's going to be interesting to see what that produces.
Well, that was the week
It was.
for August the 5th, 2022, the first week of August. Not a dramatic week in terms of tech, an interesting one, and certainly we will continue these conversations about Web3 and Substack and all Keith's friends and heroes. We haven't mentioned Paul Graham recently, Keith. What's he been up to?
Well, my personal point of view, and I don't know if Paul listens to this, but he's one of those people that's developing a kind of an attitude that evokes a kind of an entitled superiority that makes me want to throw up. So I haven't been featuring him because I decided I
So
don't
there
like
you
him.
have it, Paul. If you're watching, I'm sure you are. Keith is not pleased with you. So stop being entitled and you might get back in the newsletter.
There you go. So bye bye, everybody.